Hey, thanks for tuning in. This is a weekend review for the week ending November 26th. Hope everyone had a great Thanksgiving, a little break, spend some time with the family. We're looking at a chart of the S&P 500, and we have a gap on volume. And what generally happens here is two things. First, they're going to try to fill the gap the best they can. They tried on Friday and failed. If they can't fill the gap over the next 3 sessions, then what you're going to find, this is likely a breakaway gap. Right? We are now below all of this. So these are all trapped longs now that are going to fuel a decline into at minimum 454. But all of these are unfilled gaps. So really 430 on the table. But I just want to point out that's just the daily chart. The weekly chart pulling back into the 20, outside bearish reversal. The monthly chart, this is pretty obvious. That's a bearish reversal candle. Now, the last time we had one, right here, September, October was an outside bullish reversal. They just reversed the reversal. So it's possible the same thing could happen here. I will point out that the weekly momentum pretty much peaked in April, according to the histogram. PPO peaked in August, volume peaked in March. So it's going to be interesting to see how this plays out. But the way that these outside reversal candles work is very simple. If you close below the 458 or 457, that general area, the low of the outside reversal, then what you can anticipate is 3 to 4 more candles in the direction of the reversal. So that would likely put a test of the weekly 40 in play. And if you look at the monthly chart, 380 is the 20, and we're still riding a rising 10. So as long as she's above this 10 and above 426.36, from a monthly standpoint, it's still a bull flag pattern. But from the weekly standpoint, it's starting to become very obvious that we have a top. Yeah. So there's really no other way to look at it. What type of gap is this? Keep an eye out. Is this an ABC? I don't think so. I count this wave something like this. And now we've got an A leg down. We're going to look for a B leg up and another C leg lower that's likely to take back 50 to 61% of this move right into those gaps. So that's what I see for SPY. QQQ is a bit worse. QQQ, we got all the sells. Actually, this day right here, I called the top. This day here, I said sell anything above 400. 400 is a stone cold sell. At this point, it's just one close below the 20. It's not the end of the world. But if you zoom out, you start to get a very different picture. And as I was pointing out to everyone for quite some time now, this is a bearish divergence. Lower lows in PPO as well. Despite higher lows in price, this is not confirming the uptrend. And really, it calls into any price appreciation since this point here in question. So the way I view this is that The trend is your friend, obviously, and she's above the 20. There's no concern. She's above the 10. No concern. But what you do have is an outside bearish reversal and a close below the 5. And that's telling you right now that the 10 and the 20 are on the table. That's it. Pullbacks will be bought. 380, 375, definitely a buy. Because ultimately what you're going to look for, nothing goes straight down, nothing goes straight up. We're looking for something like that. And if you look at the monthly over here, it's a similar problem. I mean, she peaked in August of 2020 in terms of histogram. And in terms of momentum, it was August of this year. So this is one of those things where momentum precedes price, right? This big momentum thrust, it ended here in August, and then price just went higher ever since on lower momentum. That happens all the time, especially with these indexes. Let's take a look at the strongest index, SMH. Even the strongest index had a conservative sell alert, or what I call a momentum leaving the sector. But look at this. This is a breakout. And this PPO bear cross on the monthly, just a buy. Again, momentum thrust. Momentum goes sideways, resets back. All the while, you're putting in higher lows. And it's just what this chart does. So what that means is the closer she gets to the 10 and the 20, the closer it is to a buy. Right now at 300, while all the other markets are showing weekly corrections, a pullback to the 10 would be 260. That's over 10% from current price, and that would also put in a monthly reversal. At this point, we don't have a monthly reversal for SMH. All you have a low of 297, a low of 297. I mean, it's literally just an inside bar. That's it. Okay, and this thing broke out. There's no red flag here on the weekly. None. The red flag is this. 1, 2, 3, 4. The fact that we're in wave 5 now. That's the red flag. Maybe the 4's like that. Who knows? Bottom line, SMH very, very strong. Haven't even broken the daily higher low pattern. But this PPO is telling me that if the 20 is lost, that there's a high probability they're going to come fill this gap and test this former breakout area here. And again, this index is furthest from risk. It looks the best, but it is also furthest from risk. IWM. Okay. Close below the 200, close below the 80, the 40, everything. Killed it. The chart is killed. What type of gap is this? That's a bit tougher. It is a big wick, so this could be a reversal candle, right? Wicks are one of the reversals. It is at the POC going back to February of 2020. So all the shares traded, this is the most volume of all of the transactions, took place at around 222. Price is above that level. You look at the weekly chart, we've closed below all the moving averages. But if I change the 40 to the 50, which is what a lot of people use, notice we're still above it. Okay, and we did get the PPO bear cross on the weekly. That is of concern. So there's a lot of puzzle pieces here for the bears. And there's still a lot of puzzle pieces for the bulls. Right, this symmetrical triangle, A, B, C, D, E, is still intact. There's no reason to say that this couldn't have completed. Here's your wave 1, something like this. Here's our wave 2. And we're going to launch from here. I mean, historically, this chart retraces 90 to 100% of the move. I mean, here's a perfect example. Right? This chart barely was saved. Okay, if they broke this level, you would have had a very different pattern. Very, very different pattern. As of now, what you have is a 1, 2, 3, 4, and in no way, shape, or form does this, to me, look like a complete 5-wave move up on the weekly charts. I don't see that. And what you could have is that this pattern is in fact not complete yet, and that what you do have is something like an A, B, C. But even then, the timing of this doesn't look right. Because what you would anticipate would be something like, 3 to 4 weeks, 3 to 4 months as this C wave played out. If your A leg is this long and your B leg is that long, right? Just to give you an idea, your A is equal to C. It should be that long. Like a 10% down move, yes. But I would anticipate that long in price as well. And we didn't get that. We did get the move in volume, right? And we got the one extension. So, I mean, technically, that could have played out too. But again, I don't like how that looks. I'm pointing out that this big retrace is par for the course, and that's when you get all the volume. Pointing out that the bear volume is increasing week over week. This is something that I pointed out the previous week. And this is really the ugliest candle you'll see on any chart, on any time frame. I mean, here we are, almost an outside month. 216.76 will make this an outside candle, so that's obviously the bear's target is 216.76. They want to hit that level, because if they hit that level and then close below the low of this month, next month it sets up a monthly pivot. And that's exactly what you would need if you're a bear to get this back to the 20, down at 192. And really, anything below 209, in my opinion, is bringing this to 173. So the monthly higher low pattern's still intact. The weekly higher low pattern's still intact, whether you measure it as 214, whether you measure it as 216. And the daily chart is showing us a large volume spike and a large lower wick or shadow. So definitely something to keep an eye on as we come into the next week. This chart will tell you what the probability is of all the other markets moving. I will say that this higher high in price right here is confirmed by PPO, right? This high here, PPO of about 1.7. Here, PPO of 2. So higher high in price, higher high in momentum. Here's our higher low. And so far, we have PPO just reset to the zero line. PPO still above the zero line on the daily, the weekly, and the monthly. And if you look at this chart from a daily or weekly perspective, it's basically broken, which tells you that this is a monthly consolidation pattern that's playing out, just like you had here. In my opinion, you have something like this, and this really could be something like this that just drives people crazy for another year. Again, this doesn't have to do anything, right? What ends up happening is that when the markets stay range bound for months at a time, the high probability bet is that they remain range bound. All right, so just keep in mind that breakouts fail more than they work. And as a result, you shouldn't be surprised when they fail. You have to keep an awareness of what they look like when they fail. And the way they played this for everyone was a 232 close up here at the top of the balance area. 232 was the top. And then the very next day, they're down at 219, which is the middle. All right, so you have to look at this really as open-minded and unbiased as you can. When you get a breath thrust like this, okay, And this was 3 standard deviations from mean. That's kind of how we can measure our volatility, or I think they call it dispersion. But really what we're trying to figure out is how rare of an event is this? Okay? Out of all the candles, out of all, going back, how rare is it to get the Friday and the weekly candle that we had on IWM? And the reality is it's very rare, right? The last time it happened was basically here. Okay, slice through all the moving averages in one candle. And that's what was the start of the move. This is a little bit different. Here we're coming off an all-time high. Here we did not have an all-time high. Okay, this is a high, a lower high, and a lower high. This gave you the divergence that you needed. Here we don't have any divergence other than that, which is very, very different. Again, that's what's so risky about this bull flag pattern that you're really playing, is that the risk is the energy fails to release to the upside and it actually gets released to the downside. And if that were to happen, then this cross, which by the way is still on bullish momentum, right? You still have a positive divergence here. You still are confirming the higher lows. But it would mean something like this. Into the middle of next summer, back down here when no one wants her. And there's 2 things that you have to talk about. There's a reason I cover IWM all the time, and it's because some of the traders that I put a lot of respect in put a high they value what this index is doing, because Charles Dow, going back 100 years now, he also found value in what essentially in his time was IWM, but there were the railroads and the transportation index. Now we're looking at transportation and IWM. But those 2 indexes are going to give you what we call confirmation or non-confirmation of the breakouts that you're seeing in the S&P 500. And so when IWM is not confirming this move here, right? October to here, SPY's still up 10%. I mean, from where she started the month, IWM is down, and from where she started October, she's flat. Right? So in no way, shape, or form is this move higher in equities being confirmed by IWM. And if you look at this structure, right? And again, let's just do the best we can to talk about when the bears tried. Okay? Right? We don't really have the completion of this. And maybe we do. Maybe it's something like that. I don't really know. But I will tell you this. This is late stage market stuff. This isn't the start of the run. It's definitely not the start. And this looks extended as it could be. Right? From 20, it's not extended at all. But how many times and how long has she been riding the 20? At some point, the 20 breaks and you head to the 40. Right? We haven't touched the 40 since June. Right now, that's at 429. And the monthly, again, the 20 is at 384. So if you're not getting the moves confirmed, right? And we can look at IYT to bring that up as well. This is not confirming, right? Look at this. Here's the October low right here, October 11th, October 4th, whatever, October 1. Take any one of these lows. Look how much she's already retraced to this move. Right? 40% of the move's been retraced. She's about to give up the 40. PPO's accelerating to the downside. What is this gap? I mean, this looks like a runaway gap. Right? And that would put something like this. The same thing with IWM. In terms of time. You're talking about the middle of December before this thing wakes up. And if you look about, just where is she headed, the high probability bet every single time when you see a retracement of what appears to be a 5-wave move, every single time the assumption is 50% back. Every single time. But this chart is telling you something, okay? And this is why I bring up that late stage stuff. This is a lower high. Okay? IWM printed a new high. The transports did not. Okay? We're not confirming the moves higher. Does this make sense? This is absolutely what you need to focus on coming into next week and every week for that matter. Are we still in a bull market? Is this a normal dip to buy? Or is this dip the start of a bear market? Because when you get a breadth thrust that's forget all that math. When you have an ETF that opens 5% down, 7% down in one day, after already being down for 3 weeks straight, you have to ask yourself, is this a breadth thrust in the opposite direction of the trend? Or is this capitulation? And all I can tell you is that it takes time for all of these gaps to get tested. And until they get tested, you won't know. But I will say the last time you had this much volume was the low in March 4. Was the high back here in November. Right? This is a large volume day. And that is definitely something you can't ignore. And I will end the video on this. I talk about cycles all the time. Does anyone remember me talking about the full moon? Talking about monthly OPEX? Did we already forget about all that? Well, that was here. All right. We had a cycle high. The high came in here November 8th. And we got that full moon, that cycle event, whatever you want to call it, however you want to measure it. It's a seasonal cycle event. When that happened, we had an acceleration to the downside. Okay? We didn't get the reversal. And if you look at SPY, when did SPY top? Here's the 19th, which is that full moon, lunar eclipse, monthly OPEX, that cycle right here. Boom. Day later, highs put in. Boom. IWM, IYT acceleration to the downside. So what did it do? What did this cycle event do? Didn't predict anything. All it tells you is when you come into that date, if you see an acceleration or a reversal, take note. And what we had in both instances for IWM and SPY was a reversal of the trend. Okay, and what should have been a textbook setup for IWM here on this day, right here, this back test, right here, failed. And it failed miserably. And you start to see some symmetry in this move. Okay. So that's about all I have for this video. Keep an eye on these indexes. I promise if the top is in, it's a monthly, quarterly pivot, and you have missed nothing. All right, 222 is where IWM is. If the top is in, IWM's going to 173 to 190, which again would result in a 30% decline. Okay, when COVID hit, she took a 45% plunge, but remember, before that, it was 27%. Okay, so that is a standard pullback almost every time, every single time. 30%, 28, 27, 45, right now on 10. But I will point out, this is 1, 2, 3, 4, 5, at least the fourth 10% decline since March. The fourth. So they are either distributing up here or they are accumulating up here. And you will know based on how price reacts at this key point of control. You'll know how price reacts to trying to fill this gap. Whether the gap gets filled or not, that will tell you something. But that's about it. I hope this video helps. If you liked the content, hit the like button, subscribe, check us out on YouTube or Twitter, and I'll see you in the next video.